One of the best and easiest ways to acquire residential investment properties is through the use of a VA loan. So in this video, we're really going to drill down into two, maybe even three different concepts to exploit that whole VA program so that you can maximize your ability to acquire rental investment properties. So let's kick off this rodeo right now. Hi folks, Kevin Fagan here. I am the Mortgage Patriot on your side here in Central Texas in the beautiful hill country of San Antonio, serving proud Texans as well as veterans in Texas and all across the country. So two things before we start, before I get into the subject matter. If you can hit the like and subscribe button, please, that really helps you and helps me get my content out to you, so that my goal is to have a really good set of actionable videos in a library that you can access. It'll help you either buy or sell or invest in real estate. So just that simple. And secondly, even call me or text me. If you have a question on VA loans in this case, or FHA loans or any kind of financing matter, let me answer those questions for you. So please call me at 210-317-6514. I do receive calls from people all over the country, and I love talking to y'all. So let's get into the subject matter of the VA loans and how to use them to establish a portfolio of rental homes throughout your lifetime. As I walk you through these strategies, there is a companion video that I made, and it's entitled VA Loans Explained 2023. That's going to go over more of the primary residence and more fundamental aspects of the benefits of a VA loan. Great video to brush up on, but here we're focusing more on the investment aspect of using your VA as an ongoing strategy. So let's get into it. What does the VA loan allow you to acquire in terms of how many units? So that's quite easy. You can acquire a single unit, a duplex, a triplex, or a 4-unit property, a fourplex. So it allows you to have multifamily units up to 1 to 4 family while still enjoying that zero down 100% loan. Great benefit of the VA. Let's talk about two strategies using the VA loan that, when combined with purchasing multi-unit properties, can really catapult you or your family's wealth in a very short amount of time. So let's talk about renovation loans, the VA renovation loan, as opposed to a traditional VA loan. If you're trying to purchase a property, the house is just beat up, outdated, it has some issues that need to be fixed, you would not normally be able to use a VA loan for that property, because a VA assigned appraiser would go out to the property and say, I'm sorry, it's not VA eligible, because the roof is leaking, because the decking is faulty and presents a risk factor. Now, they're not going to say that you can't use a VA loan because you have an outdated kitchen, for example, or you don't have disability access to the bathroom. Those aren't the issues. It's really more like safety issues or foundation or roof issues, those kinds of things. But a VA renovation loan, you would buy the house for $275,000, for example, and you would get a VA approved contractor to go out and do a scope of work. And let's say that scope of work is $50,000 to fix the roof, to fix the decking, and to do some updating, new lighting, maybe electrical here or there, add a new kitchen, sink, and so forth. And that all totals $50,000. Great. So now you can purchase the property. You do not have to come out of pocket for that $50,000. The beautiful thing, of course, about the VA loan, it's a 100% loan. So that's funding both the $275,000 and the $50,000. So it's a $325,000 loan in this example. And $275,000 would go to pay down the house, of course, to control the home. And then $50,000 would be in a separate escrow account. And so contractors would then take draws off of that escrow account. And that's how that basically works. Most agents and most veterans, believe it or not, have not heard of the renovation loan, and there's a reason. Probably 99 out of every 100 lenders that are available to extend VA traditional loans don't have access to the VA renovation loan. So just because they can give you a traditional VA loan doesn't mean they have access to the VA renovation loan. It's very rare. I, as a broker, have access to about 135 VA lenders, and only about 4 of them allow for VA renovation loans. So it's very unique. But the savvy veterans that do understand that this is available exploit this, and you should too, because again, you can now buy a home that you wouldn't normally be able to buy because it wouldn't be eligible due to the repair work necessary. You can use the VA renovation loan. So let's talk about a little bit of the criteria. Once the renovation loan is in place, you do need to finish the work within 120 days. That's one of the criteria. Completion of work within 120 days. Secondly, what can you use it for? You cannot use it for extra square footage. In other words, you cannot add onto your footprint of your home, so to speak. If the home is 2,000 square feet, you can't add 200 more feet with more foundation and more roofing and to add basically another bedroom. You can't do it. And you cannot add anything exterior to the home. You can't add a pool. You can't add a carport, a covered carport, or a garage, for example. Everything needs to be inside the original footprint of the home. Now you can do lighting, electrical, plumbing, updating of all the inside fixtures and so forth. But again, no adding of square footage and nothing on the outside. I believe the term the VA uses is that money needs to show that it's going to make the property more livable and more valuable. Let's talk about that last investment strategy using a VA loan. And then we're going to give an example combining all these features to show you what really savvy VA purchasers / investors do to create wealth for their families. So the VA loan allows you to purchase a home, 1 to 4 units, as we mentioned, and then after just 12 months to then purchase another new home. You don't have to sell your existing home. You can rent out your existing home. The feature is the reusable nature of your VA eligibility. Once again, living in your primary home, be it a 1 to 4 unit property, after 12 months, you can then rent out your existing home and purchase another home using your VA eligibility. Now, there's some small restrictions on that. You can't just buy $700,000 homes every single time. There's going to be some restriction in terms of price points. But I've seen it happen many, many times where veterans who are only 10 years out of the service, whatever branch they were in, they've already acquired 4 or 5 homes. How do they do that? Well, once again, every 2 or 3 years, they are re-upping into a new home and they're just renting out their prior property. So incredible strategy. And all the while not paying any down payments at all, because these are 100% loans, be they just purchase or purchase and renovation, as we've spoken of earlier. So let's combine all of these 3 techniques using multifamily purchasing, using the VA renovation loan, and then using your VA eligibility again and again. Let's use one big example of a VA couple that buys a home in year 1, buys a home at the end of year 3 or the start of year 4, buys a third home at the start of year 7, and buys a new home at the start of year 10. And we're going to assume a few things. We're going to assume just 4% appreciation, which is not much. Houses, of course, have appreciated annually much faster than that over the last 10 years. But let's say annual appreciation of 4%. Let's say a purchase price in each example of $200,000 with a $40,000 renovation scope of work. And after they apply the $40,000, they've added another $10,000 of just equity just by renovating the property. So in other words, they're picking up a $200,000 property, they're putting $40,000 in renovation, and at the end of that quick renovation, their property is now worth $250,000, $250,000. Let's look what that looks like over a 10-year period. I'm going to walk through this example relatively quickly, but again, I'm going to combine the 3 aspects or the 3 benefits that we've spoken of already in this video, which is buying multi-unit properties with the VA loan, using the VA renovation loan to add equity, basically free equity because you're improving a property. And then lastly, re-upping or reusing your VA eligibility and renting out your former home. So let's look at this. And we made some assumptions. There's all kinds of assumptions that could be made. So don't beat me up too bad on this. But here I'm assuming, once again, a VA couple buys a home every 3 years. So you can see in year 1, they're buying a single unit home. At the beginning of year 4, they're going to buy a duplex. At the beginning of year 7, they're going to buy a triplex. And at the end of 10 years, they're going to be buying a fourplex. So they got one of each of the 1 through 4 units. And let's see what that looks like after 4 years. So we're assuming, again, the purchase price on each is $200,000 plus $40,000 worth of renovation, creating a $250,000 property. In other words, you're gaining $10,000 equity right away just from doing that work yourself rather than buying a $250,000 property. Monthly rental, we're assuming it's going to be a base rent of $2,000 per property. And so we're also assuming that the property appreciation is 4% a year and that the rental appreciation is 3% a year. Okay. So let's go on down the road 10 years from now. Let's see what that looks like. So 10 years from now, the VA couple owns 4 properties starting in year 10, as we mentioned. They own a total of 9 rental producing units or doors. Like some people like to talk to them. I own 30 doors. I own 20 doors. So the VA couple would own 10 doors total. They're living in one and they're renting out 9 of them. Okay. Now from that and from those assumptions prior, we have net cash flow of over $1,500 across those 9 units. Not bad. Can't probably retire off of that yet, but when you figure you haven't really put anything down on any of these properties, that ain't bad to start out. And they have probably around $300,000 worth of equity across all those 4 properties. Now let's jump to year 20. 10 more years down the road, your net income has improved to $700,000. Now we're getting somewhere, approaching that $1 million magical mark, right? And the net cash flow is probably around $3,500 per month. That's net cash flow above your mortgage expenses. So now it's getting close to something you can retire off of. And let's look at that final 10-year tally. The first of the mortgages to come off the books, your net income has really exploded to over $2.5 million. And your net cash flow is over $11,000 per month. That is definitely something you probably would be able to retire on in 30 years. So this is all, this is not conjecture by any means. I see this once again all the time with a lot of VA people who are retiring in their mid-30s, mid-40s, and maybe they've taken a second job, maybe they haven't, but every 2 or 3 years they're re-upping into a new home, renting out their prior property, and going on down the line and letting that 100% loan to value initial investment really start to pay off for them over time. And as those rents increase and as your mortgage balance decreases, your cash flow goes up and your net equity goes up wildly. So very, very good strategy to use a VA loan to be the stepping stone to build an investment portfolio. My name is Kevin Fagan. Please call me at 210-317-6514. I am the Mortgage Patriot on your side here in Texas, ready to answer all your VA questions and any other loan-related questions. And I'll see you on the other side. Thank you.